We're cooking. There we go. Welcome back to another stock market live stream. I feel like it's been a while since we've gotten to hang out. You know, it's like a long weekend. Kevin didn't post a video on Friday. It's like, what's going on here? It's all wrong. So let's make sure everything's okay over here. What's going on? There we go. It looks like things seem to be functioning mostly. Yep, there we go. Okay, great. So anyway, the big issue that we're finding right now is you've got this rise in yields that's very aggressive. You know, this morning we were doing some fundamental analysis again in the course member live stream, setting that up in our fundies report. And the fundies have been great. I mean, I think we look and we see, hey, you know, here are things that are good, here are things that are bad. But fundies are always fantastic long term. Short term, you can really get some buying opportunities when yields rise, given that there's quite a bit of fear that that inflation drama is going to show up over the next few months. You know, originally it was always going to take somewhere around 6 to 12 months to actually see the impacts of inflation from tariffs. And I think we're potentially walking into that era now. So let's see what we got here. We got Oracle, nice little rounding out around 202. Still, you've got earnings coming up in 2 days. So a lot of people are going to be paying attention to Oracle, mostly because we see this as such an AI proxy, kind of probably important for Oracle to smash to get your next leg up on AMD and NVIDIA. NVIDIA rather, has really consolidated in no man's land over here. You can see it's sort of just playing in the middle over here, kind of nasty. And if I jump into AMDs, we're trying to slowly get back to 232. Be nice to actually get back there. Although we're really going to need some good smashes out of Oracle to pull it off. We got the Qs over here. You got your hiccups pre-Fed. Somewhat expected that you're going to get hiccups pre-Fed, especially with yields rising the way they are. And of course, Netflix on its Paramount drama. It's almost like, the market sold Netflix because of the spending for the Paramount deal or for the Warner Brothers deal. Then it turned into, now Paramount's going to try to raise the stakes by making more competing offers because they really want the deal and they're pissed they're not getting it. Then they're like, well, maybe we didn't pay enough. And then Trump's like, maybe the deal's not going to happen. Blah, 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 blah. There's a lot cooking in there. Anywho, then you've got the Qs that have really just been bleeding since the AM. We had a really nice bounce off of 627 at the morning here. We've got a line there. I should really increase the density of this line because it is a very consistent line, the 627. So why don't we do that? And we could see as soon as we lost it, it became hard to break through it again. So let's go make this a thicker green. We'll give this its first little upgrade because it has been relatively consistent. And what we're looking at is, tsunami waves are forecast to be less than 1 foot above the tide level. For anybody talking about the tsunami stuff, unless there's some earthquake or whatever. Okay, but I'm watching what's going on as well. Anywho, so then you've got, what else? Michael Saylor went shopping, and they bought about $1 billion worth of Bitcoin. I mean, that's cute. It's hard. One of the reasons it's hard to use, I feel like, Bitcoin as any kind of tell of the direction the market may go is because of these frantic buys from Saylor to try to prop things back up. So you get what seems like this Sunday push or pump. And I think a lot of it is just Saylor sitting in his, Florida yacht or whatever. I gotta get to work, gotta go buy some Bitcoin. Maybe I'm just jelly, because like I was showing course members this morning, and I'm like, maybe I'm just jelly, because like I gotta go sort paint at properties. And, like there's actually some physical aspect to real estate. Imagine that. But that's all right. So Bitcoin chilling out Now, what are we at? This is the hour chart here. Here's the 5-minute chart. Yeah. Let's go out to the day here. Yeah, interesting little consolidation we've got. It's an uptrend. Typically, Bitcoin does better when we get these downtrends that are rapid, which we just got again. And you want to see some kind of rocket after that. Let's look at history a little bit here. So first, let's draw some lines here. What do we got? It's decent, not great, not terrible. Yeah. The more I move up here, the more I lose this one. I'll just stay here. We'll just throw a quick little gray on that. And then not a very clean line to the downside. You kind of have to pick what to cut off. This is not great. I don't like this at all. So I'm going to kill that one. So anyway, usually when we have these really clean sell-offs, we end up getting a breakup. It's much wide. Like if I really wanted this to be clean, I have to go pretty wide this time. So you see what I mean? Like look at that. That's kind of nasty. Compared to what typically is very orderly. And these orderly lines lead to really nice breakups to all-time highs. This is a mess. So I don't love it. Anyway, all right. So what do we have then? Yields almost 4.19. Let me see here. Let's see here. Okay. All right. So then NVIDIA, yeah, even NVIDIA is struggling to hold it. You know, really, actually, you know, I hate to say it, but like what a better line set on this might honestly just be the bear flag. I hate to do it because I don't want to sound bearish, but it's, I feel like, a little bit more appropriate. Oh, they don't have no copy. I always thought they had that copy and paste functionality. Or they just need to add other trading platforms. It's not the cleanest either. I just shouldn't draw lines over here. But roughly, typically a bear flag is going to be bearish, hence get it, bear flag. But anyway, I'm just going to get rid of these because I don't think any of these are that great. Delete. There we go. So, a little problematic though. Not great. Next support really is really 80. This the 80 line. All right, so enough quick little TA there. Yeah, broadly a lot selling down today. I think those yields not great. Yeah, we just lost the lead on the Qs.
Lost the lead.
So, you know, it's unfortunate because we do have the Fed meeting this week, and it's likely that that hiccup that we've been looking at since November 18th of, oh no, the Fed meeting, you know, that might be what we're getting today, hopefully. We do have the big data catalyst next week, jobs and CPI, so those will be important. But yeah, right now, market doesn't really have much support today. It feels like, geez. Let's go pull some news beyond these treasury yields, which we know are quite elevated. Let's go close out some of our analysis from this morning and see what we have. So, first thing, yields at 4.18 on 10-year are a problem. I'm gonna make that note. And let's now go see what the news is. So, press the news button. Oh, I made little, I put in little banners. I didn't make these banners, but let's see how if they work. Oh, isn't that nice? Look at that. Invest and reinvest. You gotta reinvest. I got a bunch of other ones too. So, but we're not gonna go through them all right now. It's kind of cool. We had a bunch of inflows this weekend, so thank you for those of you who invested in househack/reinvest. Learn more at househack.com or reinvest.co. All right, so let's go see the news. So beyond yields rising, which we know is a problem, we've got airbag problems. We got the Buffett, the Berkshire reshuffle. JP Morgan hired the CFO. China's exporting deflation, we know. The bailout for farmers to be revealed. Trump's firing spree gives Supreme Court a chance to remake the government. Well, you mean let Trump remake the government. Then, let's see here. Accounting uproar. Yeah, well, this is everybody's question. The accounting uproar over how fast AI chips depreciate. And the thing is, you could still crank chips today. You know, if I could get 3090s to work, what the hell? You know, why not put them to use? And these are old chips. I mean, when did 3090s come out? I think during COVID, 2020. NVIDIA 3090 chip. These were announced. Ship date. 2020. September of 2020 is when the 3090s came out. I still remember that. And those are 5 years old and they're still cranking, Yeah, crazy. All right, so let's see what they're talking about. The debate is raging over the accounting treatment of NVIDIA chips and other equipment that AI makers are still splurging on. This time, some of the AI companies may be overreaching. Rarely have investors obsessed over a topic as the depreciation schedule for chips. But the market's starting to pay attention. Michael Burry's complaint. Yeah, this is old news. We know. Depreciation versus profits. Blah, blah, blah. I mean, we've known this article or this argument. Let's just look at the comments. Altman versus Musk. Are the comments not going to load? Just going to like comment block. Oh, here we go. Most like. Income and EPS or optics, cash is what matters. The question isn't so much whether life is 5.5 or 6 years or the depreciation method. The question is how frequently will you need to replace the chips? Some are suggesting every 2 to 3 years. If that's the case, earnings are overstated. Yeah, I mean, we'll see. I mean, when did A100s come out? Because those things are still rentable, right? A100 server rental. So I could go to Lambda and I could go rent. All right, I want the A100. See here, the A100s right now, I mean, I could get Blackwell at $5 an hour. I got A100s with a ton of RAM. Still going here for $1.79. 80 gigs of VRAM. Incredible. That's the A100 still getting rented out. Oh look, NVIDIA Tesla V100. That's cool. They have 55 cents on it. Yeah, when did that come out? What was the release date for that? I bet that was probably like 2019. Release date. 2017, dude. Holy smokes. First data center GPU with Tensor cores. Wow. Holy smokes. Look at this. The Tesla, it's only got 16 gigs. Launched in 2017. Built on the 12 nanometer process. Bro, this thing's old as... Oh, I don't even want to say it, it's old. Oh my lord. Yeah, because it's running in line with the 3060. Oh, that's terrible. I mean, that's kind of impressive that they could still rent this sucker. Wow. Yeah, that's actually pretty impressive. So who made that? I mean, NVIDIA made the Tesla V100, but it was the Volta architecture. Code name for NVIDIA Is the first graphics card... The first graphics card to use it was the data center Tesla V100. Hi, Jack. Thanks for coming by. Appreciate you. All right, you make sure you get ready for some seed planting later, okay? So, see ya. Bye. All right. Yeah, Nvidia retired the Tesla brand in 2020 because of confusion with the cars. That's funny. Huh. Yeah, I mean that's fascinating to me. That this puppy is still actually capable of being rented out. Very interesting. Yeah, it is wild to see how far we've come. Yeah, no kidding. All right, so are the Qs going to try to find a floor at like this random position here at 623? This is all like Fed jitters is really what you've got. Fed jitters, yields, oh my gosh, Powey's going to hawk to us, you know, whatever. They're gonna money print no matter what. All right, cool. So, well, that's cool. All right. So Oracle is paying the price for these presumed negative cash flows. Real problem is inaccuracy. Real problem is what multiple the $50 billion data centers are being built at. Yeah. Okay. Altman and Musk. What is this? Okay. This week, their rivalry took a shot into orbit. I broke the story about Altman kicking the tires about getting into space. Yeah. Then on Friday, SpaceX announced that they're planning to go public. Yeah. That is interesting timing. That's a good point. That like right after, look at all these IBM ads. Right after Sam Altman suggests that. That is a good point. All right, let's see what we got here. All right. So GPT's product chief is responding to Code Red. Sam Altman recently declared Code Red. Turley is skilled at getting products off the ground and is teasing out a consensus from OpenAI. High likelihood that GPT wouldn't have launched without Nick. Okay, blah, blah, blah. So what's the point? Lately, they've been bringing on high-profile executives, don't care. Companies struggle to build a high-functioning organization. Right, like how do you keep staying ahead? User growth. This is, why did this end in September? This is month-over-month user growth, not reporting past September. Still had growth going into September, but, you know, that's obviously pre-Gemini 3.0. And even some of the 2.5 stuff. So, no shortage of strong opinions on how the product should work. Super assisted vision. Interviews with 20 current and former colleagues of Turley paint a contrasting image of him. To some, he's friendly and decisive. To others, he's direct and to the point. He's afraid to... Okay, who cares? This is just like a shill on Turley. Code Red. So what's the response? Temporary headwinds. Let's see here. Some of the safeguards may be... Oh, okay. They're saying they're safeguards. Maybe curbing the growth. That's their excuse. Oh, that's bullcrap. Oh, yeah, user growth is slowing down because we're actually just making it, safer. Come on, man. Restrictions. I don't know how I feel about that. That's wild. Okay, so this is it. Who is this guy? This is the Turley. What's his job here? Turley is OpenAI. I don't really say exactly what his title is. Whatever. But it's quite interesting. An interesting excuse, I'll put it that way. OpenAI says their user growth started slowing because of restrictions they're putting on the app. AKA, we're slowing because we're improving it, not people going to Gemini at all. Okay. There. Perfect. User growth started slowing because of restrictions they're putting on the app. AKA, we're slowing because we're improving, not people. Cool. All right, great. What else do we got out here? So then we've got... C-Info's got anything else? I don't believe that at all, by the way. Okay, so... Code Red, Electric, Archer Aviation ceded the lead to Joby. That could be interesting. Take a quick look at that. The Confluent. IBM's actually got a pretty good service business. Archer Aviation has been on a roll with a bunch of deals, blah, 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 but there's a hitch. Their aircraft has never been on a piloted transition flight. Repeatedly canceled public demonstrations where instead Joby is doing it. Ooh. Archer is very good at making deals. They're basically saying Archer is good at making deals, but Joby's actually flying. Joby carried out a maneuver multiple times at the Dubai Air Show. Wow. So Joby's actually able to step up a little bit with their autonomous, or maybe not autonomous necessarily, with their air taxi. How have they been doing? They did have a little pop this summer. I wonder if that's when the Dubai Air Show was. Although being at an air show during the summer, man, that sounds scary. But, it's up 50% from its SPAC in 2021. Some recent momentum that's starting to bleed a bit. What else? BTC. Hey, look, another chance to buy under 90K. Wow. And where are the Qs this morning? Qs. Here they are. Qs. Still bleeding on the Qs. Yeah. Okay. Let's go see what else. So FT, in the FT. Paramount. Basically trying to get the deal back for Warner Brothers. Let's see here. Retail investors help drive gold and U.S. stocks into bubble territory, the BIS warns. Ooh. Let's see here. IBM, Confluent. TPU chips put OpenAI on alert and shakes NVIDIA investors. Yeah. Wait, what's this? Boeing completion. Airbus, what? Oh, Spirit Aerosystems. Right. Not Spirit Airlines. I was confused for a moment. I'm like, what? Oh, yeah, all right. I remember that. They were, I think, implicated. Or no, I can't remember what they had to do with the door plug falling off. I don't know if they were cleared or implicated, so I won't speculate. But there was something having to do with him. Okay, good. So, kind of quiet right now, huh? Let's see. Just bleed on yields. What is this BIS warning? Bank of International Settlements has warned that retail investors are driving gold and U.S. stocks into a bubble. Oh, okay. All right. 10-year keeps running. Let's see. Well, here's the 10-2 spread. Yep, 4.19 now. It was 4.18 just a few minutes ago. Latest quarterly review published Monday by the BIS. Okay, well, why don't we go look at it? Quarterly. Here it is, December review. BIS. Pop this puppy up. Let's see what we got. Okay, this is the Bank of International Settlement. Does anybody actually care about them? We'll find out. BIS report. Let's see what's inside. Open. Here it is. Cute. December report. Risk assets held ground despite growing concerns. Oh, this will be entertaining. Volatility challenges. Risk on mood has prevailed. Valuations seem elevated. Stretch valuations. Let's see. European stocks, equity prices, lots of rallies. Credit markets are mostly unswayed. Future monetary policy easing helped. Lack of hard data. Yeah, injected some uncertainty about the path ahead. Weakening labor markets led us to anticipate further cuts. Gold prices surged. Risk assets held ground. Yes, they have. Well, except for Bitcoin. Mag 7 continues to outperform. Okay, this is dissimilar to the dot-com bubble of the 90s, which was fueled by over-optimistic expectations that were not underpinned in realistic growth. Well, you could still have unrealistic expectations now. Still stretched valuations on Mag 7, though. Let's see. Driven by the value, rally, as commonplace, risk-taking, blah, 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 blah. Corporate credit markets seem rather insulated. Well, that would be good as long as you don't have more private credit issues. Where do they mention the retail part? Notably retail. Appetite for precious metals. Trend-chasing investors, notably retail, may have sought to capitalize on gold by speculating. Blaming the surge in gold. Not on yields rising or inflation or anything. Because we really expect to see the inflation from tariffs over the next, well, it's 6 to 12 months after liberation, so we're kind of in that window now. It could still be one time, but you still got to see it show up. Okay. Typical symptom of a developing bubble is the growing influence of retail chasing trends. At the time of media hype and surging prices, retail investors can be lured into riskier assets they would normally shun by herd-like behavior and FOMO. Makes sense. Internet searches tend to surge during times of frothiness. Uh-huh. Retail investors attracted to financial markets. Internet searches have soared. I don't think the Fed is forced to go for QE. Yeah, I think that's, there's always this concern of like, oh, the Fed's got to turn the money printer on right away. That also makes me nervous, is this idea that, oh, the market can't go down because the Fed's just going to have to run the money printer. It's not that easy, man. They can put you through a period of pain first. They will print the money eventually. But it takes time. Oops, I'm out of coffee. All right. Coffee. I need more of this. Fund flow data reveals it was mostly retail investors who've been pouring into gold and stocks. Retail continues to take trading positions that counter institutional. Right. The latter is taking money out or maintaining flat positioning. Well, I mean, that's smart. There's like it's smart to reduce exposure and to hedge yourself just because we're on such a sort of turning point. So I get that. And if you were managing other people's money, you don't have the luxury of just only, hodling forever. S&P 500 and gold at risk of being in a bubble. Bubbles are characterized by rapid and accelerating price surges, followed by sharp corrections. The identification of a bubble remains an open question. Right. So we may or may not be. There is no reliable evidence that are predictable, making them difficult to disentangle. Yeah. I mean, I don't think any of this is unreasonable. I like that's the challenge, though. U.S. money markets saw an uptick in volatility with repo rates spiking. Yeah, how are we doing? Tremors in the dollar market occurred. Heightened demand for repo. Yields moved sideways. The problem is now yields are going up rather than sideways. So this was done while, this piece was released while yields were moving sideways. Now we're going up. And that's a pill to swallow. Huh. Okay. Going back to the sticks here. Still bleeding. Sim up, path up, target up, pool down, Buffett's pool's down. No. Kimberly Clark. All right. Let's just see what some of the institutions are up to. All right. So let's go into here. We're going to go see what the banks are up to. Give me a sec to pull it up. Dece 8. All right. Here we go. How scary is the labor market? Oh, that sounds hot. Trade ideas for 2026. Oh, that sounds hot too. Macro thoughts. US CapEx. Here we go. All right, so we got some stuff from SocGen, TS Lombard, and Rabo. Let's start there. How scary is the US job market? Is now the time to panic? Probably not. Oh, I hate that their PDFs are like misaligned. It's all right. I will. I need my fill opacity. There. We'll just do something like that. All right. That'll be my highlighter for them. Okay. Economists spent several years in the state of panic about the labor market, waiting for something to break. This is true. Today's labor market, you have to understand, demand surged after the pandemic. Okay, this is all a recap. Peak demand, companies suddenly had large numbers of vacancy, right? Then wage growth skyrocketed, we know. This is actually a good chart right here. The alignment of the ratio of vacancies to unemployed. This is indicative that wage growth is likely to stay in the toilet. Likely to stay low, which suggests less reason to worry about hawking, especially with last Wednesday's ADP. However, big data coming. Big data. I mean, really, the next 5 weeks suck. Data-wise. A lot of uncertainty. Okay. Ordinarily, we might expect Fed tightening to deliver recession, but authorities got lucky, supply recovered, blah, blah, blah. We know after a recession scare, employment started to reaccelerate. This is true. It did after the Trump bump, I call it. Animal spirits, but the optimism didn't last, and then you went to Liberation Day. Okay, Liberation Day was a big shock. Labor market settled. Boom time layoff rate. Recessionary hiring rate, boom time layoff rate. Right. In other words, we're not seeing layoffs consistent with recession. There's no cliff yet. You know, that could change fast, obviously, but we've been waiting for that to change forever. Bears say the labor market is about to stall. Not only should policy uncertainty lift, but companies in aggregate have been able to protect their margins by squeezing gains out of their workers. Okay. What if things deteriorate faster? I'm a little worried about small to medium, more exposed to margin squeeze. But there's no big imbalance. 2026 looks reflationary. If things deteriorate, we can expect a big policy response. Okay, this is basically a way of saying, I agree with this. Okay, so this is what everybody's hanging their hat on. Okay, ready? If layoffs tank, or if layoffs hit and we fall off the labor cliff, we are going to print more than the printer has ever spooled before. Totally agree with that. It'll be generational money printing. It'll be insane. Like yeah. I mean, it's nice to be able to say, oh, there'll be so much inflation, but ironically, you could face so much deflation that your inflation might actually just stay around 2%. But yeah, that if this falls, which it's on the edge of, I mean, here the smalls lead usually. That's the problem too. Small often leads in recession. They're most sensitive. The canary. I wish Kevin would talk about BOJ. Bro, we've talked about the BOJ like every day last week. They're going to hike. We already know that. What you know? So you could look at the USD. So USD to JPY. It's actually kind of stable right now. You know, this isn't, there's not a huge, you know, scary move over here. A bigger concern would be if US stocks really get hit on this hiccup going into the Fed meeting. But yeah, I mean, I'll slap that in here. This isn't like, I don't think the concern is really coming from Japan. Japan is probably ready and got ahead of carry trade concerns. More likely hiccups now due to you know, Fed hawking belief. Greetings from Germany. Ah, wie geht's? Wir haben Deutsche hier. Wie sind die Deutschen? Die Deutschen. Die Deutsche. Wie sind die Deutsche? No, wie sind die Deutschen? Oh, I don't know. How are the Germans? Wie sind die deutsche Leute? I don't know if I drop Leute, do I just, I don't know. I don't know. Grammar. German grammar is something else. It's quite challenging. Anyway, so Amazon. Look at that. You know, it's actually kind of remarkable. If you look at Amazon, we are trading for end of 2024 pricing. We've done nothing. Wir sind die Deutschen. Ah, okay, so yeah, I do add the N. Wir sind Deutsche geht auch. Oh. Wie geht es den Deutschen? Wie geht es den Deutschen? Wie geht es den Deutschen? Man, dude, I can't do this high German stuff. I can do gutter German and get by. All right. So, what are we looking at? It's actually interesting. I didn't even realize this. We're at 2024 levels on AMD as well. That's interesting. Nvidia's higher, but AMD hit this in 2024. SoFi still getting a little selling pressure there on their money raise. Netflix still having its bleed, falling under trend here. Look at that. Very nice trend line over here. You can see that pretty clearly here on the day chart. Yeah, Q's still selling. Look at that, almost back to 333 on Tesla here, huh? Or 333, 433. Okay. Yeah, I think the yield drama is really the pain here. Sims having trouble. Couldn't get to 64. Path, wow. Path had a little U shape there. Still holding on to a percent. Rocket, LDI. Well, yeah, these guys suffering on the yields. Okay. Let's go see here. Let's go back to this. That's the money printer talk. New York Fed, home price rise expectation steady at 3%. New York Fed? Really? New York Fed thinks real estate's going to go up 3%? Home price rise expectation. So oh yeah. Did they just release this? Center for Macro Data. Quarterly household survey. Can they not put a date on this crap? It'd be really nice if they dated their stupid articles. Press Center. Dece 8th. Here we go. All right. We released the November survey. Here's the November survey. Median inflation expectations remained unchanged at 3.2%, so definitely above expectations. Perceptions about financial situation deteriorated. That's not good. Somebody's asking me about the Segway 9. Okay, so a quick little tip. This is such a tangent, but I'll do it because I love y'all. Quick tangent. Yes, this is the go-kart I have, but I actually like the Gen 1 better. Now, this is crazy, but if you could get a Gen 1, buy it. Segway 9 bot Gen 1. I don't know if you could still get a Gen 1 go-kart. The 2 is really annoying. I'll explain that. I always want to, like, when they released it, I emailed them and I'm like, you guys are idiots. Like, this is so dumb. But basically, you need to use the app to turn it on. And it's really annoying because it always disconnects and you gotta sign in again or whatever. But you just can't find the old one anymore. So I still have a bunch of the old version ones because you don't need the app. You know, maybe you could go to like eBay. You know, Segway, 9bot, go-kart, G1. But, oh yeah. Yeah, so that's what you have to do. You have to go to like these other ways of basically getting it. Otherwise, you're just not gonna get. Okay, so basically, put it this way: if you want a go-kart and you want to go-kart around like I do, you want to be put it this way: you want to be able to hop on it and go. The problem with the go-karts, and then we'll get back to the market here. The problem with having a stupid app is, especially if you have kids, they need mommy and daddy to come over and turn it on. And it's the most annoying thing ever. Okay. Literally, as I said that, I just bought one. Yeah. Just to put my money where my mouth is. You can go find your own. But I just bought one. Hopefully this order number is not a secret. I don't really care though. I love y'all. Y'all are good people. But yeah, I'm so serious about that. You just reminded me that that's what I've been wanting to do. So this is actually a great price for the old generation because they're typically like $2,000. So the fact that it says brand new complete electric go-kart pro, that's fantastic. So that's really good. So if you could get an order like that, I think it's great. The new version just sucks. I wonder if you could get the, and we got to go back to the market here. Segway, the Optimus go-kart. So they had the Optimus Prime. Damn, bro, are you kidding me? I remember when they were selling these. They had a limited edition sale of the Optimus Prime version. $5,500 for a used one, dude. Come on, man. Here's another one. $1,900 for the old. The old one's just better. It's built different. The new one's a little faster, I will say. A smidge faster. But it's not worth the headache. And then they also had Bumblebee. So they had Optimus and they had Bumblebee. Damn. Can't find it. Oh. No, that's a kid one. Damn. Anyway, all right, enough of this. I should have bought those when I saw them in 2021. The limited edition ones. Oh well. Because I already had like 5 of the go-karts. I'm like, I can't possibly need another one, right? No, you do. Always need another go-kart. Anyway, all right, so let's go get back to the market. Sorry, somebody asked me a question. I got so excited about it. I had to go on this crazy tangent and go spend another $1,400. I apologize. So trade ideas for 2026. Trade peace, China stimulus, and rate cuts. Okay, emerging markets. I don't really like buying emerging markets, mostly because I don't know the market, so I don't know what to pick over there. So I always get a little bit more nervous. I like America. I like Train America. Call me biased. Home biased, that's fine. What do we have over here? Japan CapEx. CapEx growth is expected to continue increasing. Consistent with the analysis by our equity team, we expect CapEx spend to be strong or robust. Increased sales in Japanese machining. Valuations remain low in Japan. Well, I think Buffett's interested in Japan too. What do we got over here? U.S. equity industry indices, blah, 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 Fed meeting, University of Michigan, labor market. Oh, the labor market moving up in Canada is great, you know, because they've really almost been through a bit of a recession. Number of trade barriers, U.S. national security week ahead, and this is really boring. All right, so nothing new there. Let's go back to the, okay, we looked at the BIS. Let's go back to the Fed survey. That was right here. All right, so expectations about the year ahead deteriorated slightly. Unemployment expectations improved slightly. Oh, well, that's good. Credit access deteriorated. Somebody says, did you see an MP insider sold $24 million of stock? Do you think that affirms your claim they will go to $31? Well, you know, my thesis about MP material $31 is technical, but it's also fundamental. The reason I say that is they're not going to generate meaningful earnings outside of their Apple contract until probably 2030. So, you know, in the Alpha report, you know, we called them going to 100 back when they were like 70 something bucks. You know, they were in this range. We're like, hey guys, this is probably going to break out to 100. The day it was at 100, I said, down from here. Like, that was one of my favorite calls because it was just on point. Now, I still think they're going to go to 31. So we are consolidating on this 55 line. So credit where credit's due. It hasn't been straight down. But I'm still bearish on this until 31. Now, if we go below 31, I actually consider becoming a buyer. Okay? We just had another stock in the Alpha report that that's run up like, I don't know, 30% in a week since we bought it. And that's because they, you know, well, mostly because they smashed on earnings. They really gave us a good heads up that their earnings smash was going to come. So I think there are actually opportunities in this market, and we talk about them daily, but I think there are opportunities in this market to where we don't have to say, hey, if we want tech exposure, we have to buy Tesla and we have to be willing to pay these valuations. You know, I'm not excited by these valuations at all. I'm much more like, let's get a little update here on the what's Tesla's valuation right now. So let's go in and then let me look at the 10-year again. I've got the 10-year right now. And it's still 4.18. And then let's go see Tesla. So Tesla, I'm going to edit this puppy and let's do an updated analysis on them. Or just a valuation update. So now their growth should be about 40%. And Tesla EPS. They got written down by Morgan Stanley this morning, which isn't a surprise. And I love what I'm seeing with FSD. They just got rid of the stupid nag. It's not as bad as what it was. 1.63 expected EPS. Growth forecast, though, I'm only sitting at, for Wall Street, which I'll give you my version of it, 37. I actually think Wall Street's going to potentially be higher than me. Oh my gosh, yeah. 43 on Wall Street's expectations right now. I mean, I'll leave it, but I actually think those are high right now. 43% compounded annual growth rate right now. Let's write that down. So Wall Street has Tesla at 43% EPS growth next 4 years on average. EPS right now, end of year expected at 1.63. Okay. So that puts, let's divide this out. Okay, 43, that's good, that's good, that's good. Okay, so that puts us at 433, let's say, divided by 1.63. That puts us at a PE ratio of 265, forward PE ratio. And then the PEG ratio divided by 43, that's Wall Street's estimate, is 6 PEG on Wall Street's 43% EPS growth expectations. You know, that's a big number. That's really big. You know, so you're expecting big growth, and on that growth number, you're at a 6 PEG. So, you know, if you go look at another company, like just for giggles, look at what's UiPath right now, just an AI software play. UiPath right now is sitting. I mean, this is in our stock tab in the course member stream. I don't want to go through all the details here, but we're at a 177 peg on UiPath as an example, right? So then you look at like a UiPath 177 peg, that just by the virtue of it, of valuation, has upside of 51%. 51% upside on UiPath to get to fair value. Tesla as a manufacturer has downside of 70% to be at you know, a fair valuation. So that's what I mean. Like, I think there are opportunities where you could go sniping, and you kind of just have to be a little choosy in this market. But it's good because this Fed jitter crap creates opportunities. So we'll see. Okay, let's keep going with that Fed survey. Let's finish that off. That was here. Somebody donate $10 for bringing up UiPath. Sure thing. Chart guide. Oh, this is just the question, basically. This is how they explain it all out. Okay, that's fine. Whatever. So who cares? You know, survey. You know, this idea, though, about people's financial situations deteriorating notably, worse off than a year ago. You know, it's this slow bleed. Okay, let's look at our caddies, because the caddies are obviously big right now. So, catalysts. Okay. We have Fed meeting and ECI DEES 10. Expect, you know, we were bullish NOV 18 through DEES 9, then hiccups. I believe last week's ADP miss should soften some of the hawking we expected for tomorrow, but expect hiccups. You know, we're literally going from no caddies, right? NOV 18 to DEES 9, basically no catalysts to a lot of catalysts. And that's going to be, we have DEES 16, CPI, Dece 18, jobs November. Then I've got January, I think it's 8 and the 13. I'm going to fact check these. And jobs December. Let me get jobs BLS schedule of releases. It is, oh boy, calendar. Come on, farm rocker. Why can I not get my calendar? List view. How rude. How rude. BLS schedule of releases. Oh, here we go. Jan 26. So it is the 9th. Ah, okay. CPI schedule of release. So the 9th and the 13th. All right, I was very, very close. So that's the 9th. Okay. So, and then I can actually just slap the CPI on the 13th. We'll slap that right there. Okay, cool. And then BLS. There we go. Okay. So, slap those in so I don't have to find them again. All right. This is a lot, right? These are all the caddies that were really hidden, right? So far, last official jobs report is September. You know, so it's been a while. So it makes sense that there'll be some nervousness going into these data releases because we're about to get 2 in 5 weeks, right? We've basically had no data for, call it 8 weeks, and we're about to get 2 months worth in 5 weeks. It's a lot. So as long as we don't fall off a cliff, though, it's bullish. As long as no cliff, bullish, soft landing, bullish into all-time highs, January 28th, and inflation settling with tariffs, slow cuts. Any cliff equals major money printing. Nick T. Households pessimist. Yeah, everybody's just talking about this. October, November PPI data will come out on January 15th. Oh, okay. Jan 15th, PPI, Oct, November. Well, there's more. So we just got even more. So this is a big moment right here. I believe if we can get, I would say, as long as we don't fall off a cliff by Feb, let's look at the jobs date. It's probably going to be like Feb 3rd. 6th. Feb 6th, that would be the Jan employment numbers. Sticking soft landing seems like a 2026 bet. All right. If we cliff dive, money printer is coming. And the biggest risk to me is Sam Altman. Sam Altman alone could literally do the following. Sam Altman rugging 1.4 trillion by market losing confidence in him looks like this, okay? Understand what this does. Sam Altman rugging 1.4 means NVIDIA forecast for Q2 drop. That means AMD forecast for Q3 drop, which means because it relies on the NVIDIA money, right? Which relies on NVIDIA money because it's all a big giant freaking circle, right? I mean, we know it's all bullshit, but I want to make money from the bullshit before it all goes to crap. Obviously then data centers get hit, already being hedged somewhat, okay? Then private credit gets hit. At the same time, falling stocks equal Japanese carry trade unwinds faster. And the money printing may not be enough. It will be eventually. Eventually it will be. So how do you protect yourself? Okay, long assets, right? Long assets protect you from that massive money printing. They won't allow deflation, in my opinion. Right? Deflation is worse. So they'll money print galore, and that typically benefits real estate and stocks in the long term. So I personally, I don't expect hyperinflation even in the face of money printing because of the anchor of deflation. Right. So we'll see. So that's a little bit where my head sits right now. Now, the Fed survey, I don't think this really tells us anything. The deterioration in the consumer is really a sideshow. I hate to say it, even though the consumer is a big part of the economy. AI is driving the only leg of growth right now. So I'm going to say that. New York Fed shows household financial situations deteriorated notably. We already know that. That's already old news. That's why Sam Altman is the leg holding up the camel, so to speak. Like, forget about the straw that breaks the camel's back. He's like the only leg, or the legs, you could almost call AI being the legs that are keeping this thing up at all. So I don't think that's much of a surprise. All right, let's close out some of those things. Now, T.S. Lombard pushing this, and the BIS piece, combining this. This, by the way, isn't great. The BIS on retail. So retail's kind of funny because when stocks go down, everybody freaks out like, oh my God. So let's see here. Oh, it's the 14th. Okay, let me fix that. 14, not January. It's actually the 14th. Edit. 14. That was PPIs on the 14th. Okay, got it. So retail loves stocks when they go up, but that's been driven by the AI bubble, right? So ironically, unfortunately, retail has been rewarded by buying dips because AI has boomed market in spite of tariffs, geopolitical drama, right? Retail loves stocks that go down briefly and up a lot. An extended downturn is very painful for retail. See BIS report as well. Like the BIS report would basically just reverse. So that's not great. That's this idea, the momentum and the searching, right, for internet traffic and stuff like that. So really, like, the insulation is basic. Insulation is really diversified, low debt, right? So this could be, diversifying, whatever. It could be real estate, quality stocks, sniping low valuations, right, etc. So, like, I think there are stocks to buy that have low valuations that are more insulated, but not everything. Okay, cool. So what else is going on? So this was the Financial Times piece. Let's see if they have comments on this. So when gold rises, it's a warning about the financial plumbing. The BIS should be warning about horrendous levels of debt in the world. Yeah. Well, the irony about that is, like, we're just going to get started with the money printer. That would be my take is the irony on debt is global debt will explode during next money printing run. So debt will get even worse. And it's still sustainable. Remember, you could look at debt expense as percentage of GDP. Total public debt, interest payments. St. Louis Fred, total debt, interest payments, percentage of. Here we go. Yeah, see, look at this. They're actually starting to decline. We still haven't hit the 95 or actually mid 80s and 90s recession peak. So, like, we have a lot more money we can print. My evidence, we can print a lot. Okay. So that would be right here. That's this chart right here. That suggests we have a lot of room to print. Kind of wild if you think about that. He says, how many AI stocks are undervalued? Well, I guess you just have to join the Alpha Report to find out. Dude, we're kicking it. Killing it. Somebody was asking us this weekend, they're like, hey, how many people, by the way, are buying the Reinvest AI 2-year versus, or like the pay in 4 or whatever versus the lifetime access? The Reinvest product, we have, I would say 98% of people are locking in the lifetime. As opposed to the pay in for like a shorter period of time. Like, I have seen very, very few people buy the lower tiers. Most people are buying the lifetime access, which is a really cool sentiment for the support of what we're doing at HouseHack/Reinvest. It's really cool. And I think that's why we have seen this increase, like a step change of investors flowing into HouseHack as well. Not a solicitation, read the offering circular, there's risk with every investment. But like even this weekend, I was like, wow, man, I didn't post a video for 3 days. And then we get like nearly $100,000 of inflows of people just wanting to invest at the lower valuation. We'll probably get a new valuation, if not in 2026, then in 27. But that'll change our funding rounds, obviously. But anyway, okay, so let's keep going. Let's see what else is being said here. Yeah, see here, you've got, so Trump announces the farmer bailout, and then only so long before Trump tariff costs hit consumers and business. Yeah, well, remember, 6 to 12 months is my thesis. Only so long. Trump administration, economists say just wait. First half of next year, we're going to see the more broad-based price increases. Yeah, well, I agree with that. You know, that's when you have the lap and the inventory really comes through. Sticker shock. Could come as soon as January as they run low on inventory. Yeah, absolutely. So that's going to be a slap in the face to consumers already at a rough time. So I actually fully agree with that. So that's where we talk about this inflation argument was with the New York Fed right here. Inflation, tariff shock takes 6 to 12 months due to inventory hedging, right? Let's pop this in here. Sonny says, I own my own home. How am I benefited? Yeah, so interestingly, if you own your own home, You can benefit in two ways from inflation. One is if you have, ironically, if you have debt on your home, it's easier to pay that off when there's inflation, right? But then second, home values tend to rise. They tend to be a protector against inflation because if the value of the dollar goes down, the value of the asset tends to go up in terms of the dollar. So I don't like cash, but I prefer real estate. Like I'm just never gonna. I was like I was saying earlier. I'm just not gonna be a digital asset kind of guy. I'm always gonna be a physical asset kind of guy. Let's see. I got some other picks here. What do I get here? Yeah, I love this stuff. Just stupid little stuff like I get happiness out of. I'll show you two things. One, this is gonna seem crazy, but I get happiness out of something like this. See, like I'm like, hey, you know what? This is a shoddy, hanging conduit over here. I get happiness out of taking this picture and then, having an electrician work with us on fixing this. These are actually nice LED bulbs, but this is a junky, funky ass job. Should really be mounted to the fascia, right? Like, I get happiness out of that. And then I also get happiness out of putting lockboxes on. So, but yeah, the funny thing is, the underlying economy will actually deflate. That's actually what's kind of funny about the inflation thing. So at the same time as this happens, right? At the same time as tariff shock hits, which keeps Fed artificially hawkish, which is bad, makes them too late. The underlying economy is actually deflating. Deflating. You get deflation. Deflation comes from artificial intelligence and China. Intelligence, China, and a lack of wage growth. Right? So, but the Fed doesn't want deflation. And so the deflation actually licenses the money printing. Right? That's how it's very complicated. The deflation licenses money printing so they can try to keep inflation positive. So that's the whole Ponzi, basically, is they won't allow deflation because it's so bad. That's why it's seen as a Ponzi. So if we go to, where was the labor chart? Labor. Where is that? Here. Right? So this wage growth falling is part of that. Slap that in here. Yeah. So wage growth likely to stay low, right? Which suggests reason to worry about the hawking. So you go through a very weird, next 6 months. That's, hopefully less. But these next caddies matter so much because you have to go through all this. So that's why the catalysts matter, right? You have a Fed hawking into deflation because of tariffs, while the underlying economy is deflating, and AI is propped up by Sam Altman, right? So that's why there's recession chatter, right? That's why everybody's worried about a recession, because they're like, if Sam Altman goes, nothing holds up the economy, and you'll have you'll have major deflation. And again, they'll try to print their way out of that. It's very interesting. Kind of wild. You know? Kind of wild. All right, so here's The Economist. Let's see. Ore mine. Okay, so nothing new here at The Economist. You saw Joby. Here's the IBM deal. IBM's paying a 33% premium for Confluent. Oh, okay, no other details on it. Okay. Power Paradox. Oh yeah, let's look at the stimmy. What's this? $12 billion aid package on Monday. Administration, what is this? Why can't I want to read it? There you go. Prepare to draw a $12 billion bailout. USDA funds. Yeah, they announced that months ago, and it's taken forever. Expected to start receiving funds in February. Yeah, and then you'll actually end up getting stimmy checks too. You know, I wouldn't be surprised to see that either. Um, stimulus wouldn't surprise me. We'll make the same mistakes again. Kind of insane to some extent. It'll just be slower, not as crazy as last time, and that's why recovery could take longer. Slower though. So you hope you don't want to fall off. Citigroup calling for more rate cuts. It's fine. Let's see here. What else? BBC's stand with Ukraine. Okay. What else? Zelensky in London. No deal yet. 7-2 tsunami alert. Right, but we only expected about a 1 foot wave there, so that was no surprise. What about, where do we sit? Is AI making us dumb? Well, that's the research that our brain activity is basically slow. If you just rely on AI. Yeah. Somebody says, "Bro, why are you so bearish?" I'm actually not. I'm mid-range. I'm telling you that if you go to meetkevin.com/data, you can see my bear bull scale. I'm mid-range. So I don't think I'm a bear or a bull. I think I'm pretty in the middle right now because I recognize that these data points can cut either way. Like this is why we're shock prone. People wonder, like, what does it mean to be shock prone? I just described it basically at length, right? So we're shock prone, and that's a tough spot to be in. All right, so what else do we have? Let's see here. Your Lowe's order is out for delivery. Is that address correct? Yes. I love delivering paint to properties. Okay, does this date still work for delivery? Yes. And I think the AI likes it when I reply. Oh, it's entertainment. All right. Cool. Cool. All right. Yeah. All right. Good. Let's go to zero hedge. That's all fine. Let's try the zeros. Zero hedge. So Trump readies one rule executive order aimed at centralizing AI regulation. That's true. Soon all commodity charts will look like gold. Yeah, if we soft land, he's probably not wrong. Market is mostly there already. What do we have here? So this is markets were mostly stable over the weekend, while Japan quietly Australia, Canada joined. Global economy looks more resilient. Inflation remains sticky. Several central banks shifting to hikes. Potential change in narrative. Job growth accelerated. Where is this? U.S. K-shaped labor as a counterweight on inflation. They think job growth accelerated. Wait, but this is, where is this though? Which bank is this? Because these are all based on global hikes. They didn't make that very clear. Hawkish Fed. This week is about the FOMC. Consensus overwhelmingly hawkish cut. Yes, we know. New Fed chair. Okay, well, that's boring. That wasn't really useful. AI events, the JOLTS report coming out. That's true, we get JOLTS too, but it usually doesn't shake anything. Farm program, Morgan Stanley downgrades. What'd they say? Morgan Stanley downgraded Tesla, but they raised their price target. Oh, that's interesting. Adam Jonas, no longer the primary analyst. Coverage is now being assumed by someone else. Wow. Premium valuation given its leadership position, but that high expectation on the latter have brought the stock closer to fair valuation. I mean, okay. That's one way to look at it. They assigned $55 per share to autos, $40 to energy. Wow. So only $95 for autos and energy. $145 network services, $125 to robotaxis, $60 to humanoids. Well, so you're fully pricing all that crap. It's not icing on the cake anymore. You're fully pricing it. Okay. All right. Need more coffee. What is this? 10-2 spread. So let's see here. Oh, let's see. Assess franchises. Nextera, fine. Boring, boring, boring. Confluent gets their buyout. Home sellers are giving up. Well, this is the time of the year they tend to. October. Oh, yeah, we saw this, I feel like. Didn't we see this? No, it says published today. Home delistings. We're up 45% year to date. Let's see here. Canceled agreements on the rise. Late fall seems to be the time when most homes come off the market. Very true. Very true. Inventory tends to fall. Because, I mean, who wants to be listed on the market through Christmas, you know? Most people don't. They generally say, like, we'll just try again in the spring. What the hell? Crazy ad. They just start playing the audio of it, too. Gosh, that's crazy. I was just noticing over here how interesting that they did the estimated walk-in shower price ad over here. They had to put a blonde in the shower. Why? Why do you got to do that to me? Yeah, this is ironic. Mortgage rates finally moved lower, but they're going to go right back up with this yield. Yeah, Rheinmetall's been killing it. The problem is, like, how much has it been already propped up, right? You know, I mean, the belief is that the European manufacturers are going to have to take over because of a hawkish Trump over here not wanting to supply as many weapons. And if Europe takes over, that'll boost, obviously, European defense contractors. So it's hard to say. It's such a political game that props up those the valuations of those companies. All right, Tesla didn't quite make it down to 433 yet. Man, Adobe slippage. BTCs, Qs. All right, let's go see. Let's get some videos. Let's go see if there's anything juiced on the vid front. Like I know, we had Lutnick. Was it Lutnick or Besson? I don't know. There was some yapping this weekend. Oh, I know Hassett went yapping this weekend as well. So we'll go see. Faux News. We'll go check Faux News. Faux Business. Here's Faux Business. Jamie Dimon. Ooh. Let's see here. Bankruptcies for mom and pop skyrocket. We already covered that. All right, what's O'Leary freaking out about? We'll go look at that. So O'Leary's freaking out. Welders and electricians become the new elite earners. Well, yeah, because you have the data center build-outs. Absolutely. Okay. And then Jamie Dimon. We'll go take a listen to him. While we listen to Jamie, I'll go hit the restroom. And then I'll listen to. Let's see. 12 minutes. Oh, where's Jamie? He can't be on here for 12 minutes. Well, he kind of is.
That you'd like to invest in.
Right. So, it's become pretty obvious, particularly since the invasion of Ukraine, that national security is critical, not just for us, but for a lot of countries. And if you had any illusion that the world was going to be peaceful for the rest of our lives, hopefully it was shattered. And, at that point, people realized, I heard from military officers, I heard from companies, we didn't have enough production capability to make the bombs that we needed to ship. We had rare earths. You've already heard about the rare earth problem. We rely on China. And it's not just about China, but we rely on single parties for things we need for F-35s and nuclear submarines. And we rely on China for something like 90% of the ingredients go into our pharmaceuticals and 90% of our penicillin. And again, it's not all about China. It's about the United States needs to have security and resiliency about things for security that we can rely on. This year we said, what can J.P. Morgan do? So it's literally, and we broke it out into 27 very detailed categories. So it's rare earths, of which there are many, by the way. It's lithium. It's the medical ingredients. It's drones. It's satellites. It's cyber. It's even education in some cases about what we need to do to get the workforce. In some cases, just having the backup resiliency.
I know that you announced the investment in Perpetua as well. And Jamie, these are really potentially big investment ideas, because I think last week President Trump was saying that ever since the government invested in some of these companies like Intel and Mountain Pass, they've already made tens of billions of dollars. In fact, I believe it was your firm was among those firms that actually brought Mountain Pass together with the White House. The White House takes a stake in Mountain Pass, which, of course, is one of the few companies that are able to do the processing and refinement of the rare earth minerals. If you had this program in place then, would you have actually invested alongside government and taken a stake into Mountain Pass, for example?
Yeah, no, absolutely. I thought they did the right thing, because one of the problems with the rare earths is we have rare earths, but they got to be extracted, concentrated, produced, and turned into magnets, and that's a long process. And I should have mentioned some of the stuff you need to do is, it's not even just the investment, it's the analysis, the research, and changing policy. Like, we need to change policy on education and policy around permitting and some EPA policies to allow some of these companies to do this. But absolutely, I thought the government did the right thing in Mountain Pass. They gave them a kind of a longer-term contract with a set price to give them time to do all those things. And one of the things that happens with some of these companies is the price gets, you have a competitor come in, the price gets cut, and they're going to fail. So we need to find ways to stop that from happening, to give the company a chance to, to build some economies of scale and compete.
I want to get your take on how you're managing things, of course, as one of the most important banks in the world, J.P. Morgan, certainly in America. How do you manage the China threat? Now that we know clearly it is an adversary, you've seen the China Select Committee try to stop you and other Wall Street banks from taking companies that are tied to the People's Republic of China, stop them from going public. You've had consistent cyber breaches, surveillance of the United States, exploiting the visa processes, stealing intellectual property. Tell us how you manage that. You see all of this bad behavior, and yet it's still a customer. You're doing business in China. It's lawful.
Yeah. So, I give you credit for you raised this issue a long time ago and, put some focus on it. But you got to step back and look at the big picture and put it in context. America has the best position in the world. The American public should understand our GDP per person is $80,000. China's is 15. We have peace with our neighbors. Not that we don't have some problems. We have peace with our neighbors. They live in a very tough area. Most of the people around them are rearming because of the actions they're taking. They've done an unbelievable job in certain technologies, so they've caught up in certain technologies. But we still have the most prosperous economy nation in the world. They have terrible demographics. They've had some mismanagement of their economy. The notion that come out we're way behind. Now go to the specifics. Foreign policy of the United States is set by the United States government, not by J.P. Morgan Chase. And there are a lot of things we can't do because of the government. I don't want to do it when they tell us not to do it. And when they tell us we don't do it. Some of these things that get raised are very specific things where, we think the person raising the issue is generally wrong. I mean, you may love congressmen, but I can't have every congressman decide who we do business with. And so if we thought that a company we were doing was doing inappropriate stuff, or we were told by the United States government that it was doing inappropriate stuff, we wouldn't do it. Now, if you look at what we're doing in China, we bank, I think, 3,000 multinationals in China. So these are a lot of companies, some of whom are going to be here, and so we kind of have
closed this network. Jamie,
we try to be very careful.
This is so boring.
We're not going to.
I'm sorry. Sorry you had to listen to this. I listening. I'm like, okay, I get it. Yes, Intel and MP Materials, they've got up billions of dollars, but and Jamie Dimon's like, we got to keep the competitive edge. Jamie Dimon just wants to lend to these businesses, But that was so boring. I had to lend nothing out of that. All right. Why is Kevin O'Leary freaking out? Let's figure that one out.
Report is revealing the declining value of college degrees in today's labor market. This year, white-collar employers have been slashing entry-level jobs and stepping up their investments in AI, and it's showing in the data. The Labor Department says a shocking 25% of all unemployed Americans in September had a bachelor's degree or higher. Taylor, I'm coming your way on this. You are the AI optimist around here.
I am.
Okay, you like college too. You have many degrees. But it's not working out for a lot of college graduates. Is that a problem with AI? Is that a problem with college? Or is it not a problem at all?
Oh, let's see. I don't think it's a problem with AI because I am the AI optimist, where I still continue to believe that, who used the analogy yesterday? When Uber came along, we all thought, oh my gosh, that's going to put taxi drivers out of business. But it just gave Uber drivers a new business. So I firmly believe that AI will help us to create new jobs that may be.
Okay, where's Kevin O'Leary?
In 6 months.
I'm going to hear you profess because it's just not going to work.
Sorry, Taylor Riggs. I don't think she has a structured argument here. This, on the other hand, let's see some anger.
And students in master's degrees, either MBAs or in Masters of Science and Engineering. And this is the truth. And not all the tenured professors like me saying this to the class. I teach the cases, but I tell them, look, you're a highly curated class of people here. You've been picked from all over the world. This is, for example, a Harvard class. You've come from everywhere in the world, and you've made the cut into this cohort of, call it, 120 people. Now, you're going to forget everything I say and all the other professors that are going to pitch you stuff over the next 2 years. But what you're not going to forget are the people sitting beside you. They are becoming your network for the rest of your life. And there's where the value is. First, to get into MIT or any American college in the post-secondary and be with a cohort for 12 to 24 months and meet these people. And already I'm seeing these pairings only after 6 months where two of them didn't even know each other saying, hey,
Can I ask
let's
you a
start a
question
business.
about that, though? Because I've said that. I've made that argument to Brian. That's
doesn't
my
like
friends
that
and
argument?
family round on my new VC deal, right? I call them up, and they're my new venture capital money. And he says, well, that's a pretty expensive way to network. $200,000
Yeah. What do you think?
want me to spend to get a network?
But I was going to extend the argument, which I think you may or may not like. When we talked about cutting off access to our institutions to foreign students, I thought that was an insane idea, because if we don't take them, the Chinese are going to take them.
Right.
Because when you
That's a good point,
curate
actually.
the best of the best in every discipline, and you bring them to American colleges, they get indoctrinated into American society. They want to stay here, and they want to get a visa, and they want to bring their families over. We did it for decades.
I love all of their faces are like, damn, he's actually making a good point, but that point is anti-Trump, and that doesn't align with our with our script. I kid you not. Look at this. Look at this. Fox Business when Kevin O'Leary makes an anti-Trump point. Hold on, we gotta zoom in on this. Yep. Uh-huh. That checks. That checks. That checks. That checks. Oh, she's giving him like the side eye. Oh, damn. Oh, I like this. Is now juicy. See, you know, Daryl, you're missing the boat, man. You get this Daryl guy in the chat's like, oh, so you're saying Kamala Harris would have been better? Damn it, Daryl, what's your problem? Take a logic class, would you? Logic 101. Just because you don't like one thing doesn't mean you automatically like the other thing. It's so dumb. I see that argument. It's like, how, like, do people not realize they make themselves look like a fool when they make these binary arguments? It's crazy.
Decades, and we're a very successful economy. So I am vehemently against this idea that we're going to just not give visas to some genius in wherever to come over here to MIT or Harvard. I don't even understand who would think of that.
Okay, go ahead, Dagan.
These universities are going to need these foreign students to come and pay these exorbitant costs because of AI, because the technology is at people's fingertips. Individuals who are 17 will be able to use AI tools and their knowledge and creativity to, on their own, create greatness in new businesses. And I hope that these colleges are absolutely, who have ripped off the American people for generations, will be left in the dust. Listen to this, Atlantic piece. At Brown and Harvard, more than 20% of undergraduates now are registered as disabled. At Amherst, it's more than a third. It's because they receive testing accommodations and extensions for take-home assignments. At Carnegie Mellon, whose severe anxiety makes concentration difficult, might get extra time on tests, that it's like Stanford, it's a problem. This is an Atlantic article, that you're so special you got into Harvard.
You're saying they're
and you
cheating
need
the
coddling.
system?
You need coddling and special treatment because it takes too long to take a test. This is an embarrassment. I can't wait for these universities to starve.
I want to give you an exit question, Jackie. 2/3 of Americans say college is not worth it.
Notice how she had to basically totally not address what Kevin O'Leary said and just go back to bagging on the universities because that aligns with Trump.
Do you agree with them, or do you think it's still worth it?
In today's day and age, I would say no. We know many people that are very wildly successful and unsuccessful. I think of somebody like Mark Zuckerberg didn't graduate college, but also somebody like Kim Kardashian didn't graduate college. They both went out and made a lot of money in different ways.
Yes, that's who we should be modeling after, Kim Kardashian. Oh my God. Is that it? Was that the Kevin O'Leary part? Kevin did a great job. And then this rant was ridiculous. Oh yeah, there's the face for you. There's the face when you get proven wrong on live TV. That's it. I took a screenshot of it. That's classic. That's a good one. Okay. So... All right, very well. Okay, so that's that. What about... Did we get any ABC? Let me see this weekend. Ah, there it is. Face the Nation. That's exactly what I was looking for. And the YouTube algorithm knew it. So, Face the Nation. Here's Besant. Here's the Somali drama.
Good morning.
Let's take a look at this.
And welcome to
strong holiday season, and we've seen across all the income cohorts thus far, and so there's nothing to say that they're $2 instead of $30.
The president was wrong to predict lower numbers of purchases and higher prices.
The economy's been better than we thought. We've had the 4% GDP growth in a couple of quarters. We're going to finish the year, despite the Schumer shutdown, with 3% real people.
Not be resonating with consumers that have been polled by CBS. 60% of Americans polled by this network told us President Trump makes prices and inflation sound better than they really are, and his approval rating on the
well, duh.
America's real incomes are up about 1%, and what we're not going to do is say that Americans don't know what they're feeling. We've been working on it every day. I was on your show on March talking about affordability. We've made a lot of gains, but remember, we've got this embedded inflation from the Biden years where mainstream media, whether it's Greg Ip at the Wall Street Journal, toxic Paul Krugman at the New York Times, or former Vice Chair Alan Blinder, all said it was a vibe session. The American people don't know how good they have it. Now, Democrats created scarcity, whether it was in energy or overregulation, that we are now seeing this affordability problem. And I think next year we're going to move on to prosperity.
You do think there is an affordability problem?
Sorry?
You do believe there is an affordability
I think
problem?
the Biden administration created a terrible...
No, but now we're nearly 12 months in. You said the president would own the economy at this point.
I said that the Biden administration created the worst inflation in 50 years, and maybe for working Americans, the worst inflation of all time. And we have pulled that number down. That Strategas Research does something called the Common Man Index. Under Biden, the accumulated inflation number, as measured by CPI, was about 20%. Their index showed 35. This year, for the first time, the Common Man Index is below the inflation index because the basket of goods for working Americans, food, gasoline, rent is coming down. So I wrote an essay March 12th, 2024, and it talked.
All right, hold on. This douchebag here in the chat is a little cunt. We got to call him out really quick. Gary JP, why do you love foreigners but hate Americans? First of all, you're lying. I've never in my life said that. And the only reason I'm engaging with this loser is to teach, because they don't matter, but it's to teach everybody that those are the people that exist in our world today. People actually believe that stuff. So you have to be careful. Like, people like that are out there, and you don't want to devolve to that. Everything, whether it's stock analysis, political analysis, or whatever, there's so much more than black and white. Unfortunately, critical thinking isn't taught in our schools. It really should be. And people don't take logic or critical thinking classes in college, so you get stuck into these like echo chambers, and it's really bad for our society. I don't know what it's going to end up turning into, but my goal is always to try to give the balanced arguments on both sides. And that actually reminds me about this Besant thing, that, the other things that I think a lot of this is already priced in, but things that are bullish for the economy, these are going to be useful. So, bullish catalysts, right? But some of these, I actually argue a lot of these are already priced in, a lot likely already priced in, but this idea of like deregulation, I think takes a very long time. Unfortunately, this takes a very long time and increases the risk of fraud. I hate to say that, but when the more you do have a deregulatory environment, the more likely you are to have like scams. Think about it. Regulatory staff has been cut. Think about the Consumer Financial Protection Bureau getting gutted, how should I put it? The implications of that may not be known for a decade. Like, we're still today, ironically, Trump is benefiting off of better protections for people, fewer scams. And that has been built over the last 15 years. Undoing those regulations won't show their positives and negatives, because there will be both, for many years. I'd argue a decade. So I think that is a little bit of a risk factor, that the deregulation argument is a little too overbuilt. Then obviously, the idea of continued rate cuts, rate cuts only happen when we fall off cliff. Fall off cliff, or very, very slowly as tariff inflation fades, right? But the cliff is bearish. So, like, the bullish arguments, I don't love either of these that much, because one means recession and the other is slow. So think about that. For 2026, like, these two bullish catalysts are actually, one, not near-term bullish, dereg, takes a lot longer. B, I guess it's technically these three, right? These three bullish catalysts, because there are two versions of rate cuts here. The three bullish catalysts are actually not bullish near-term, A, the deregulation argument. B, rate cut for cliff rate cut is bearish. And C, slow rate cuts also suck, because you want them faster. So, like, I get it, this deregulation argument or whatever, and even Besant's making this now. What you really need, the best catalyst, hands down, the best catalyst would be pulling a Canada with jobs. Okay, so let's look at Canadian employment, San Luis Fred. Let's go to, I need the actual, like, employee, the jobs reports. Canadian employment jobs reports by month. Give me some kind of chart here. Statistique. Of course, that's how the frickin' Canadians would list it. Oh, our Bureau of Statistics? Nah, man. We have a Bureau of Statistique. Show me something more Canadian or less Canadian. I don't know. All right, so here's the... Oh, man. Come on, dude. I'm going to have to chart this myself. All right, I will do that. Let's chart this myself. I'm going to have to make my own freaking numbers spreadsheet here. New. All right. So I've got July, August, September, October. Somebody writes, oh, we. That's funny. Oh, we. 954. 954. Anyone in the 954 in the house? One of the numbers I'm writing down here from these jobs reports is 954. I grew up in the 954. Now I'm in the 805. All right. So now we're going to chart this. Chart. I just need a basic line chart. There we go. Look at that. That's great. That's a Nike swoosh in jobs. That's great. All right. So, let's go screeny this. That's what we need. That would be the true bullish catalyst. Right? Where's that?
Bullish catalyst.
Yeah. Oh, I should put why don't I have my banner up? Oh, did I just screw things up? I hope I didn't screw anything up. Did that banner screw anything up? I feel like the audio hit for a second there. No? No? Okay, no, everything's okay. I don't think I screwed anything up. Can I put that banner up without screwing things up? I don't know. I'm going to take it away for a second. All right, so... Sorry, it's my job to shill house hack. I really love it, too. It's my little baby. Okay. So... Somebody says most of the Canadian jobs are the government. Well, let's see if that's true. It says here... Where's government in here? Public administration. No. It's actually not true, man. That's been flat to stable. Okay, so watch this. Actually, we could do something cool. The way this lets me... Oh, please don't tell me I deleted that file. Oh, no, I didn't. Okay. So that's the total. And then we'll do government. Oh, let's paste and match style. See, now I could show your government number. Look at that. We could use facts to immediately respond to your statement. Oopsies. Unfortunately, I gotta press the right buttons. And what the hell? Why am I not getting this to work? It's a 2-line chart. Does it not like the months? All right, let me try this. Chart. What the hell? I want to be able to... Oh, because it's so small. Oh, damn it. Okay, so I'd have to do like a change. Oh. I don't want to do that. It's fine. I can, though. All right, let's just do this really quickly. All right, so... This needs to be basically I have to kill July and then I have to take the change. So I'm going to have to go here to here and then I need to normalize this there. Oh, why are they all rounding to 1%? Oh, because I'm going to have to take this. Divided. Oh, because it's percentage. Duh. This. Let's go to percent. There we go. And then we can actually minus 1 off of that. There we go. Okay. Okay. There we go. There we go. There we go. So percentage-wise, let's see. I don't know how useful this is, but we'll be off of this in just a sec. Let's see percentage-wise. Percentage-wise, government has not been a very clear, contributor. That's what we see in the numbers as well. The numbers are pretty stable here, right? But you can see percentage-wise, government actually fell. Isn't that interesting? Somebody's part-time, full-time. I don't really look at the Canadian numbers that often. But the point of this is if you have aggregate growth here, it's good. So, I'm sure there's some nuance that's missing here. Service producing, goods producing. But I don't want to go through all of these. But it's very interesting. So I could put service producing as a percentage of this into the first chart. I don't want to screw up my charts though. Oh, there we go. Paste. See, if I go here and I put in service producing, now I could do a comparison of these two because these numbers are decently close to each other. Chart, line chart. I did it again. All right, it doesn't matter. We get the idea. All right, move on. Why can I not figure this out? Ah, whatever. I'll deal with it later. All right, so... All right, what else? Then... Q's down 35 bibs. Somebody says, all I want to hear is little BP. Little PP.
Little PP.
Ah, Google tells advertisers it'll bring ads to Gemini in 2026. Wow. That's big. Let's go to Google. Wow. Goog's falling on this. Why? That's quite interesting. Yeah, look at that. It's interesting because when Google was up here, a lot of people in the Alpha report are like, Kevin, should we buy Google? Should we buy Google? I go, I think that's the perfect way to get a top is to fully price in maybe you'll have chip revenues in 3 years, you know. That was interesting. Okay. So... Okay, we saw the stimulus. Treasury yields chilled a little bit, still 4.18. And the journal... Okay. Let's go listen to the Doomers. See if they have anything new for us. Nothing. They're a commercial. How rude. Okay. Oh yeah, that was all coming off Besson. But yeah, Besson was kind of boring there. What do we got here?
Departures aren't going to move the name. When I think through the big departures, where did they go? Meta and OpenAI. And obviously Johnny Ive is at OpenAI. So in theory, why are these people leaving? They're leaving to create products for consumers to buy. And so OpenAI has been really clear they want some product that has no screen. And I think where this is very risky business for these other companies is the reality of them, Meta outside of the Ray-Bans, or OpenAI be able to pull off a new product that we as consumers want to buy, I think has like a 5% probability. And so I think Apple is still in pole position from a consumer product perspective of being able to not have the cap spend, still have great talent. And as long as Tim Cook is there, then I think the market, after Q4, earnings are going to be solid, will continue to move itself higher.
The stock's not that far off its high. I mean,
no,
288.
It's had a great run. It's just had a really...
Was it 277? It's 277, 288
yeah.
was the high.
Yeah, Apple's done very well. All right. What else? I think it's time to do a summary, isn't it? Yeah, we could probably summarize all this. But I want to see if the Doomers have anything else. Let's try the Doomers. Doomers, boomers. What do we got here?
Bloomberg Intelligence back with us now for today's drill down, where we focus on one ETF.
Oh, yeah.
Eric, what do you got?
Give me the drill down.
Teased earlier, this is the greatest performing ETF of all time. Okay, it's the triple leveraged tech ETF. So first of all, triple leveraged.
Yes, that is a risky thing to say. The triple leverage is the best performing ever. Yeah, it might be for now.
Is it different than TQQQ in that it came out in December 2008? So talk about good timing to start a tech ETF that has leverage. It's 85 bips. Traders love this stuff. 4.4 billion, so very big leverage ETF. Let's look at the holdings.
Noob.
What does this do? It goes to various banks and gets swap contracts, which is basically like a bar bet with a big bank. that it's going to give you 3x every day. So every day, these are different banks, swap contracts. Now let's look at the performance. If you go back since this thing was incepted, it is up a whopping 48,000%. I mean, what else can you say? If you look at XLK, the tech ETF that it's tracking, it's only up 2,000%. And so you can see this is obviously way greater than 3x. Why? The compounding effect. It's rare. Normally you get volatility drag, so I wouldn't recommend holding these long term. But occasionally, if something just goes up like this, like tech did, you can compound this thing. And there's the cues in there too. So again, we call this hot sauce. I'd even call it a power tool, Katie. But when it works, it works.
All right, Eric, thank you. Joining us to talk about this
Hot
ETF
sauce.
is Douglas Jonas. He is the CEO of Direction. Great to see you in person.
Thanks for having me back. It's great to be here.
So you think about that performance stat, 48,000%.
It's not bad. That's not bad.
Not bad, not rookie numbers there. Is anyone holding a fund like this like that, or is it more used as a trading tool, as Eric says?
Yeah, I mean, look, first and foremost, if you don't understand how leverage works, then let's start with education. Come to direction.com. We'll teach you how it works. Traditionally, most of our traders are just that. They're traders. They're not really holding on to these things for that long. But for sure, there's going to be people in some of these ETFs, and there are.
That's this, by the way, which is crazy because, like, let's take a look at this. The drawdowns, the ups and downs. So they launched it in 2008. Oh, my Lord. See, this is what they're ignoring is... If somebody bought it, let's see here, somebody bought it at launch, they would have been down 55% within a year and a half. Look how fast it collapses. So it goes from $1 to $3.50, and then you basically get a full wipeout. So it goes through reset cycles. This is super dangerous how fast it moves. Now, of course, I mean, if you cannot get liquidated or not dump it, great. But let's see over here. So this was 2018 bond market crisis, goes from $16 to $660 divided by 16. That's another 60% drawdown. So the drawdowns you go through are insane. How was COVID? Oh, this was COVID. Wow, look at the run though. 29 goes all the way down to 7.8. That's 73%. Wow. Let's see here. Triple leverage, man. Ballsy. Okay, then it goes up here. So here's Liberation. Went from $90 down, again, 77%. And this is not even a recession yet. This has not lived through a recession. Imagine a triple leveraged ETF in a recession. GG's. It's over. That's wild. Huh? But for now...
Bullish catalyst.
Can't argue it for now. But I think it's a little misleading for them to go, oh, you know, it's had these great 14 or 48,000% returns. Yeah, you'd have to survive all the insanity first. Huh? I guess it's marketing. One way for these people to market, I guess, huh? All right, what else?
Are you going to come back with revised proposals, or are you going to say this is a line in the sand that the SEC doesn't want to cross?
Yeah, look, for Direction, most people don't know us. We launched our first leverage ETF in 2008. We're one of the largest providers out there. There was a lot of rulemaking that happened around the derivatives rule that really put everything back to 2x. Grandfathered in the 3x, so we can talk about TechL and some of our other ETFs. But really, everyone since that point has only been able to do 2x. The ETF industry, as we all talk about every day, is the fastest growing industry with the smartest people in finance right now. Smart people look at rules and they find ways to try and progress the industry forward. A lot of us filed for 3x products. You've had a few filings out there for 5x. You know, the SEC.
To me, this guy is the definition of the face of bankruptcy. I hate to say it, but like the next recession, just mark this. The next recession, this guy, Douglas Jones, is going to get sued to oblivion by the amount of people who got destroyed on 3x leverage products. The class action lawsuits like write themselves when they all of a sudden go to zero. And people are like, you went on Bloomberg pitching a 48,000% return. And then a recession hit, and I lost all of my money, and it went to zero. You didn't tell me it could go to zero. And they're going to be like, well, we did this disclosure or whatever. And then watch, you'll see 3x leveraged ETFs get banned forever. And they never make it back. I don't know. Maybe that's too bearish. But that wouldn't surprise me. I'll put it that way. And like, I get it. Go trade. But some people hold these things forever. And that's the scary part. They just hold this stuff forever. Especially now at all-time highs. I don't know, man. That's just... But all right. Well, close to. Not quite at all-time highs yet. Had a little bit of relaxation here. I got to get through the Fed now. So that's... I guess we should talk about it. I'm kind of like procrastinating talking about the Fed. But we'll talk about it in just a sec. There we go. Okay, that's done. Boom, skitty booms. Boom. Perfect. All right. Now I can put noob versus pro banners up. Pro! Noob! Oh, but noob should be bigger. There we go. Oh, isn't that nice? Look at that. Boom, boom, boom. Noob needs to be a little bigger. There we go. Now we can incorporate that. Should we have a sound effect? Sound effect or no sound effect for Noob v Pro? I don't know if we want a sound effect with them. Like, what could a sound effect be? And then we could... Let's see here. You know, for Pro, we could do... Success. I don't know if anybody can hear that. What is she here? Restart. Yes, that's what we want. Okay. So let's see if it comes up when I press the button. And then, I don't know, let's go like -4 so it's not too loud. Monitor. There we go. Now let's try this. No, it didn't work. Alright, I'll have to figure that out. I'll have to figure out how to do the audio. But anyway. I'll handle that later. All right, what else is going on? So, sword clash sound effect. Let's go. That's like the Biff commercial. Ray Dalio says the Middle East is becoming the Silicon Valley of capitalists. Oh, they got all the money, man. The money, honey. Yeah, slope lead there on the Qs, huh? Noob rubber chicken. It's funny you say chicken because I think I got... Did I get chicken? Oh, I'll play with the sound effects later. But yeah, that's not a bad idea. Or like, you know, have you all seen the meme? Like the shirt or the coffee mug that's like FA and then CAWOFF, like the sound of the chicken. Y'all have seen that, right? This one. Oh yeah, there it is. These are great. Yes, just pronounce that out loud and then you're good. You should really get a coffee mug of it. All right. Cool. Let's see what else. Bloomberg. Apple, Tylenol maker, blah, blah, blah. Okay, that's done. Wall Street Journal, covered that. Got that. Obamacare, fine. Interest is percentage of the debt. We saw that. The 10-2 yield curve, the 10-year treasury, the $12 billion bailout. Only so long before tariffs hit. Yes, we know that. Then we've got Jared Kushner is part of Paramount's hostile bid. No way. Oh, because Trump's going to obviously lean on him. No way. Oh, this just got juicy. Oh, no way. Yeah, look at that. Financing partners include the Kingdom of Saudi Arabia and affinity partners Jared Kushner. Wow. The Saudis and Kushner. Wow. That's crazy. The Saudis again. Oh, that's crazy. Oh, that spices up the whole Paramount deal because they basically own Trump. I mean, I hate to say it. That's wild. The Axia show with Carp. It could be worth looking at later. Let's put that over here. What? Carolyn Levitt's nephew is set free on bond as she fights potential deportation? Brazilian woman with ties to Carolyn Levitt set free as she fights her deportation. Shares custody of an 11-year-old son with Levitt's brother, Michael. She was arrested while she was on her way to pay. Wow. So as soon as Trump's policies start affecting people in the White House, you know, you gotta let them loose, I guess. Lowest bond release possible. The Trump administration described last week the government's characterization as criminal illegal alien with previous arrest is unfair and untrue. Right. Yeah. It's the rules are for thee, but not for me. Right. So the government is saying the person has a criminal past. Trump is going, no, this is unfair. You know, this is a Democrat witch hunt. No. My God. The individual has now suddenly chosen Carolyn Levitt to be the child's godmother. Come on, man. You can't write these scripts, dude. It's such a like grift. I'm okay with it because it sounds like Levitt's family used the White House connection to have her arrested. I think it's a hypocrisy is in your admin. You're winning, sir. Trump administration doesn't like to live by the same rules the rest of us peons have to abide by. Well, I mean, yeah. Somebody writes, it's mob boss. It's all about friends and family. I mean, that's exactly what it is. All right. Here's the spread. Bonds. Okay. This was interesting. The chip depreciation piece. Oh yeah, the BIS report. Tesla downgrade from Morgan. And then the BIS report was here. The bubbles. That Optimus robot fainting is crazy. Where's that? Is that a friends and family discount? Let me see. What is this? This is suspicious as hell. It was reportedly recorded at Tesla's Autonomy Visualized in Miami this weekend and posted to Reddit. Optimus is seen falling backwards after smacking some bottles to the ground, but the weird part is just before falling backwards, both of its hands immediately shot up to its face, as if pulling like a VR headset off. Actually kind of looks funny. It does look like somebody's taking a VR headset off. And they forgot to like disconnect the remote control. You know, that's basically like an allegory for our economy. This is the allegory for the US economy. It looks great until the curtain is revealed. Shut down. That's one way to quit. Yeah, no kidding. Oh, man. All right. Let's take a listen here.
Ability to do business in the meantime, to continue to churn out movies, to continue to make TV shows.
Not good. There's a lot of uncertainty. David Zaslav, the CEO of Warner Brothers, put out a note to staff last week saying, everybody just focus on your job and, business at hand. This is going to take a while. But we saw this even with this company when AT&T tried to buy or did buy Warner Brothers. Ultimately, it was challenged by the Justice Department. There was an extended period, and people felt that it really delayed, say, the launch of the Warner Brothers HBO Max streaming service and some of the initiatives that they should have been making at that time. So there's really no good to come from this extended review period.
Jen, final question to you. If Netflix were to promise not to raise prices or keep prices low for consumers, because that's something that Elizabeth Warren, the senator from Massachusetts, has brought up.
Oh, whatever. It's talking about their pricing power. Of course they're going to raise prices. They just spent a lot of money trying to buy Warner Brothers. All right. So, let's touch on this. All right. Let's go through this. Okay. How are we gonna do this? I don't know. Let's just YOLO it. Take this crap off. We'll do it live. Alrighty. Okay, give me a sec here. Let me just get the rates. Fed rate cut on. Okay, let's go to the Fed Watch tool quickly just to see. We have 2 days to the Fed. 89.9% chance right now that we're going to get our cut. That aligns with pretty much what everybody's thinking. And then it's just a matter of what are we going to see for January. January setting up for a lot lower of a chance, but that's okay. Well, that'll all come down to the commentary anyway. Okay. Cool. Alrighty then. There we go. All right, let's talk about this. Well, in 2 days, the Federal Reserve does their usual cut rates and pretend to tell us that they know what the hell they're talking about. And in this video, we got to break down why the next 6 weeks are so much more critical than the last 8 weeks that we've had, and why it means everything for the state of the economy. Look, The last 8 weeks, we pretty much haven't had any catalysts or basically reports from the government to tell us how things are kind of going on now. Even though we believe a lot of these reports are rigged and inaccurate, at least it's something to go on. Things have been pretty dang quiet. We had government shutdown, we didn't really have catalysts that showed up because they either got canceled or delayed, and they're all delayed to, well, now basically the future, what we get to look forward to. And so we're really running on fumes in terms of data. And after all, the Federal Reserve is supposed to be
data dependent.
And so that's why it's not a surprise that right now markets are a little on edge. Today, you've got this rejection at 627 on the Qs. You got a little bit of a bleed over on the Qs. Tesla got a downgrade, so you got a bit of a bleed on Tesla. MP Materials kind of keeps dropping off those all-time highs that we FOMO'd up to under the Trump administration's investment into the company. You know, Tesla's almost back here at 433, still knocking on the door of all-time highs, but, you know, intraday, it's been bleeding a little bit. It's down almost 4%. So what's going on? It's all Fed nervousness, but not just that. We got to know the conditions for what could actually mean that we could turn this money printer on and start really getting back to a real bull run, kind of like maybe Canada's trying to pull off. So let's talk about this. First, mark your calendar for the following dates. These are really important. We've got the Fed meeting and the employment cost index coming out on Wednesday. That's December 10th. Then we have the inflation report coming out on December 16th, followed by the November jobs report on December 18th. That's already a lot. So we get to know, are we getting inflation from stuff and from wages? The answer is probably not yet, though we're still worried we might see some tariff inflation coming up. The Fed basically wants to cut. The only reason they would be hawkish is this fear that this tariff inflation is going to come and prop up inflation, which unfortunately increases the odds of them making a mistake if the economy is about to roll off a cliff. Then we got caddies coming up Jan 9th, Jan 13th, and Jan 14th. In order, jobs, CPI, PPI. So basically, well, for the last 8 weeks, we've pretty much had no data. In the next 5, we're about to get a crap load of data. And what we're looking for is, are we about to fall off the cliff to where the money printer is about to get yeeted on? And there's a pretty real consensus, T.S. Lombard agrees, that if layoffs hit, then we are going to run the money printer like never before. Now, people argue like, but Kevin, how can they possibly run the money printer? Debt is at all-time highs. And that's always where I like to say, that's the noob argument. The noob argument is, but Kevin, debt is so high. How could they run the money printer when there's so much debt in the economy? It's true. There is a lot of debt. The government owes a lot of money. We're at a very high percentage of GDP, but what matters is our ability to sustain the debt. See, usually companies don't go bankrupt and you actually get hyperinflation, which, you know, the Ponzi of paper money will evaporate at some point for every country. But the question is really, is it something we have to worry about now? And the pro says, well, what is our capacity for actually paying this debt? And that answer is right here on this chart. Back in the mid-'80s and the early 90s, between the 80, 82, and the 91 recession, during those 3 recessions, our outlay, or a percentage of GDP that went towards interest, was actually substantially higher than where we sit today. Which means the capacity for us to keep paying this debt and keep the sort of Ponzi going is actually really high. So yes, the debt is a problem. And yes, that is leaving the 10-year treasury yield elevated right now. But it's not actually what will lead this economy to collapse in the near term. There are other issues. And small businesses are a leading indicator that we might be trending towards recession. Small business employment is falling. SMEs, small medium enterprises, are usually a leading indicator that, hey, there are real problems in the economy. But there's a flip side to this, that if we look at what's going on in Canada, Canada's basically had this recessionary 2-year period, especially with a housing crisis that they've had. They don't have the benefit of a 30-year fixed rate mortgage in Canada. But you've had a lot more of a challenge for Canada to deal with even Trump's tariffs. But look at what's happened recently. If you look at the last 5 months of jobs data in Canada, it's actually started to form a Nike swoosh recovery. Now, some people say, oh, but Kevin, that's just government jobs data. And when we charted it, we actually saw a decline in government jobs while we've seen this increasing growth rate, these right here, growth rates, in total jobs in Canada. So I'm not here to profess that I know everything about the Canadian economy, but what I am here to say is that if the U.S. economy can stick a Nike swoosh recovery in the labor market, we could actually go for bullish catalyst for the United States. But that's the only thing that makes me bullish on the U.S. economy, is that we can Nike swoosh a labor market recovery. See, a lot of people say, Kevin, we should be bullish because of deregulation coming. The problem with deregulation is it takes a very long time. See, that's where I also like to say the noob says, but Kevin, they're going to deregulate. You know, they're going to cut for every one regulation that Trump creates, they're going to cut 4 other regulations. That's great and fantastic marketing. But the pro knows there's a massive lag between when you get regulation cuts and when you get benefits from those regulation cuts. I like to think about it in reverse. The benefits of how strong our economy is today overall, I don't want to say the economy is like perfect today, but why the economy's been so resilient. You know, we have issues, okay? I'm not blind to the issues we have right now, the K-shaped recovery, you know this. This is all old news. We already know that. But one of the reasons we've been so resilient after 2021 and 2 and 3 and 4 is because we've actually been propped up on, you know, a relatively strong set of regulations that have made companies more transparent to their customers. Fewer scams and fewer frauds. When you remove regulation, you can actually create a bubble that takes years to form, and some of the components of those bubbles are fraud. And it takes years for those to actually fall. So Pro knows that deregulation is a delayed bullish catalyst. The other bullish catalyst that people are really excited about is that, oh, well, the Fed will just keep cutting rates. Maybe that's a foregone conclusion. The noob's like, oh, but the Fed's cutting rates. The pro looks at that and says, bro, well, what's 25 bips here or there going to do to actually support this economy? Not much. So near-term regulation cuts doesn't really help us. Near-term 25 basis point cuts doesn't really help us. It's too slow. And if we fall off a cliff because the labor market collapses on these catalysts that are coming up, then that's also really bad. So all of those that appear to be bullish are actually bearish. And that's why I say the best thing, hands down the best catalyst that could happen for us, is that we pull a Canada with our jobs market. Is that the November and December job numbers, and even going into January, so the job numbers that we're going to get the first week of February, so February 6th, these next 3 jobs reports, if we could pull off bullish catalysts on those and actually not fall off a cliff and not see layoffs skyrocket, best case scenario for our recovery. Now look at T.S. Lombard. T.S. Lombard tells us that right here, we're sitting at a recessionary level of the hiring rate. But in addition to this recessionary hiring rate, we're at boom time layoffs. In other words, layoffs haven't ticked up. Well, this is old news. We already know this. But the pro also comes in and says, hey, wait a second. If this is true, then what happens when all of a sudden we switch and layoffs spike? Well, that's when you get instant recession, right? We know that. That's old news. Okay, fine. So what are the catalysts that could be bearish? Well, the biggest negative catalyst for this market, in my opinion, is Sam Altman. Sam Altman is the biggest negative for everything that we're facing right now. Why? Because I kind of think he's sort of like the leg. It's not the straw that breaks the camel's back. I kind of see Sam Altman as the legs of the actual camel. That is the only thing really propping things up right now. See, if Sam Altman rugs his $1.4 trillion of AI data center spending, then AI forecasts for spending on NVIDIA chips plummet in Q2. And then that leads to a reduction in investments for OpenAI, which means less chip sales for AMD in Q3. So then data centers get hit, which is somewhat already hedged, but then private credit gets hit. And if you align that with stalling or falling stocks, the Japanese carry trade issue unwinds even faster. It all comes together in a bad way. So it's not to be broadly bearish. It's just to say you need Sam Altman not to die, basically, for OpenAI to fall, because that would be bad, because those are all the spending commitments that are propping up the economy. And you want the labor market staying propped up, while at the same time we're like, man, is the Fed going to rug pull us, or are they going to print money? Well, they can't print money until things fall off a cliff. And if things fall off a cliff, it's too late. Then the Fed proves they're too late. So you're really in this crappy space where we're hoping the Fed doesn't hawk too much, but why are we seeing stocks sort of vacillate right now? Well, it's because of the nervousness that, hey, we got a Powie Wowie and a potential owie this Wednesday. It's obvious. So hopefully we get, we're expecting a cut on Wednesday. We're then hoping that Powell doesn't hawk, and instead he just says, let's focus on the data. We've got a lot of data coming up before the January 28th meeting. And that's the window that I think the real pros are looking at. The real professionals are saying, look, between December 16th and January 13th, we're going to get 2 jobs reports and 2 CPI reports. If we don't fall off a cliff there, hopefully we can stick the soft landing. And yes, we're going to see through some tariff inflation. It's only so long before Trump tariffs hit consumers. We already know that. We've known that inflation from tariffs was going to show up about 6 to 12 months after liberation because companies stock up on inventory. And then once they run through that inventory, they have to acquire new product at higher costs. And when you acquire new product at higher costs, you're going to have to pass on some of those costs to the extent that you can. And if you can't, your pricing power goes down, your stock goes down. If you can, then consumers face higher costs. Both are bad. So either EPS goes down or consumers face higher costs, and we see it show up in consumer inflation. Both of those aren't good for the stock market, but we want to see our way through that. We want to see that limited. And the best time to see that is this next 5-week period of time. So we're coming into 5 weeks that matter. The last 8 weeks, less so. Way fewer catalysts. Now, at the same time, Donald Trump is pumping stimulus. Donald Trump is pushing for $12 billion of a farmer bailout that's robbing the emergency fund over at the USDA to bail out farmers who have been hurt by the soybean disaster with China, but then also just broadly tariffs on machinery, which isn't great for farmers. At the same time, the Saudis in this filing are partnering with Jared Kushner to try to bankroll Paramount's acquisition of Warner Brothers to fight Netflix buying Warner Brothers. So it always seems to show that the Trump administration's family has their hands in a lot of what's going on, even in the Paramount Warner Brothers deal. I mean, it even goes as far as Carolyn Levitt's apparently nephew getting being involved in getting bailed out of prison. Look at this. Levitt's brother, Michael, gets bonded out at the lowest possible bond after the Trump administration says that the individual who got bonded out at the lowest possible level, the actual government is like, oh, this is a criminal. They've got a criminal record. They got arrested by ICE on the way to drop off their kid at school. You know, they're going to get deported. And then that flips and turns around with, oh, no, that's actually unfair and untrue, says the Trump administration. That's not true. This is rigged. It's just kind of interesting because it shows that a lot of this economy is a friends and family game. And so Donald Trump, going back to econ where we want to be focused on, Donald Trump has a lot of incentives to keep Sam Altman propped up. Because if Sam Altman doesn't stay propped up, which is why he's asking for government backstops, then the whole sort of moving camel could collapse. So you actually do want to watch the friends and family moves of the Trump administration, because they are the very things that could temporarily keep things propped up longer. Again, Sam Altman falls, the whole thing collapses. There was a piece in the Wall Street Journal this morning yapping about the depreciation schedules again, by the way. I want to note that, what pros do when it comes to this talk about depreciation is we look at, hey, well, what are the actual depreciation curves? And there is literally a 2017 NVIDIA V100 chip that is still getting rented out for 55 cents per GPU hour. That's incredible. So you have an incredible money producer still on a chip that is 8 years old. This is has comparable performance to like 3060 chips, the consumer grade 3060 chips. It's insane. Oh, look at this. Literally just now, US to allow NVIDIA H200 chip exports to China. Literally just now, breaking news. I'm telling you, everything right now is propped up by the Trump friends and family benefits. So that should shoot NVIDIA up right now. Yeah, fat green candlestick right here on NVIDIA. Now, whether or not China actually buys them is, not necessarily a foregone conclusion. Now, you look at some of the other reports that are going on in terms of our retail investors, for example. The BIS has a whole piece on how the S&P 500 and gold are at risk of being in a bubble because of retail. Basically, how much retail buying there has been for artificial intelligence and gold, and really this trend chasing. But they at least acknowledge that it's hard to say that this trend chasing definitely puts us into a bubble. While it's definitely speculative, we don't really know when there's a bubble. And that's kind of a funny acknowledgement. So the the Bank of International Settlement put the study out, and they're like, hey, we don't have any tools for actually identifying when we're really in a bubble. So this is why I say, bottom line, as long as we can keep jobs ideally doing a Canada or stabilizing over the next 6 weeks, we're good. We shouldn't have to be worried about this pop. Now, if the AI bubble pops, that's when we have a problem. It's the AI bubble of Sam Altman rugging 1.4 trillion, leads to the private credit falling, leads to stocks falling. Stocks fall from more than a dip. Retail runs out of money. Leverage blows up. Japanese carry trade blows up. That's exactly why I sit midpoint on the bear bull scale right now, or the bull bear scale. It's probably the better way to put it. I'm midpoint. I'm a 5. Right there in the middle. Because there are so many things that can go right, but that labor market is the one thing to watch for. So this is where, when we look at yields right now, 4.18, this sucks on the 10-year treasury. It's anti-stimulative, mind you. And it's no surprise that we're at shock level at a 59 on the 10-2 spread. But the real question comes down to these next catalysts. So expect nervousness over the next 5 weeks, and the data will be everything. I would argue that with a survey of 40,000 jobs right now on the next labor report coming out next week, as long as we get something that's positive, we're probably good. Sounds crazy to say, but break-evens for the labor market are probably plus or minus 0 right now because of the deportation movement that we've seen. That means as long as we have positive data, even though it's a big downtrend from what we've seen at the beginning of the year, labor markets could still be okay and actually gives you sort of a floor to ramp up off of. And so I'm optimistic we could pull a Canada here. And that makes me really excited. That gives me bullish catalyst. Means you've got some time left to pick up, in my opinion, things like real estate, because it'll take a little longer for those yields to really fall. And yields come down one of two ways. One, very quickly, because you go into a recession, yields come down, which is supportive to real estate. Or slowly. I don't mind slow because it means the economy's holding up and you still get that slow trend down in yields. But it's going to take a while. It's going to take some real time. So anyway, somebody here writes, NVIDIA, yeah, exactly. So again, this is on the H200. Now keep in mind that NVIDIA has argued that we may not actually see China buying our chips. And so that is a risk factor because China is trying to diversify away from American chips. So that's a near-term risk factor. You know, initially people are going to go, oh my gosh, this is great. Let's write up NVIDIA's earnings. Fair. But be careful, because if China doesn't buy any, then it's sort of like, wait a minute. Okay, now they're trying to really ice us and prop up their own chips, whether they're Alibaba's chips or, you know, whatever. I mean, they've all probably stolen IP from NVIDIA anyway. But I think it's a really good consolidation of where we stand right now. The positive catalysts of deregulation or this AI boom or whatever carry real risks for next year. We need to V-shaped recovery. We need to Nike swoosh like Canada. I'm optimistic we can pull it off. But until then, I sit in the middle and I go, you know what? I'll buy stocks and I'll go snipe what are good values in stocks, as we've been doing in the Alpha Report. Make sure you get that over at meetkevin.com. But I'm certainly not going to leverage up for it. Anyway, that gives you my summary of what the hell is going on in this market. Thanks so much for watching, and we'll see you in the